In today's video, I'm going to be sharing with all of you the top 2 stocks that all of you should be keeping in your watch list for tomorrow. I'm also going to be doing an update on some of the stocks that I've mentioned last week and answer some of you guys' questions for those of y'all who dropped those stocks of interest in the comment section of our last video. Alright, y'all. Before we begin, again, do not forget to annihilate the like button on your way in, and also don't forget to subscribe if you are new to the channel. Right. So let's get right into it. Right off the bat. In the last video, I told y'all that I was bullish on the market and that I didn't have any reason at all to be bearish because of this very simple structure on the 5-minute chart. We're gonna go back to Monday. There it is. All right, so the structure was right here, and I told you to watch it for a move up to that red zone at the top. As you can see, the structure broke out after hours right there. All right, and when we got to the top at around like 376, it went a little bit higher to 377. Turbulence hit, which was not surprising. So that was something that y'all should be looking out for. I mentioned that in the last video. A pullback was coming after it got to that level. Right now, things are looking a bit different and a bit better for bulls. Over here, like Friday, the market didn't collapse on Friday, which was a good sign. And right now, it's again testing these levels right over here at 380 bucks. All right. Now, will we break through it? I think the market is going to, it's gonna need to take some time. Like if we zoom in really closely, and I'm going to use the Nasdaq for this example. Like if you zoom in to /NQ, and we look at the 1 hour right over here, right? You can see that there is kind of this, there is a bull flag on here. Now, the bull flag is not my favorite thing to trade or to go long on. The reason why is because it has a tendency to misbehave or just waste a lot of time. It's not like the other structures that are a lot more simpler and get to where I want them to go a lot faster, right? This one, again, I've seen this play out multiple ways. Like the best ideal way possible is that it doesn't chop, it just does what it could do. Like when everything is ideal and the environment is good and there's a lot of money being put into the market. Like ideally, you want to see this thing run all the way up to 11,800, like somewhere over here in that circle, right? But sometimes, again, sometimes, and it wouldn't surprise me at all if we drop all the way down here. This is option number 2. Again, option number 2, we drop all the way down to 11,200 by around 9 or 10 a.m. tomorrow. Again, kind of like a just a retest before we bounce into the close on Monday and potentially push higher on Tuesday. That's option number 2. And then option number 3 is the one that really pisses off everybody who bought right here for a swing, hoping for option number 1, which is to just continue to go higher by the end of Monday and then immediately get out, or option number 2, right? But option number 3 is this. Very annoying. It's where it drops over here, closes at the lows on Mondays, right? And then immediately fails on Tuesday and just drops all the way back down to $10,600, right? Like I have seen it happen. So the bull flag is the absolute worst. It's the most annoying structure. So be very cautious. Do not be overly optimistic. Like we had a little spike when the futures market opened, but it's slowly fading back down. And tomorrow, I wouldn't be surprised if we had a net gain of exactly 0%. And we see option 2, at least the beginning of option 2, play out. All right. So that's my thoughts on it. Now, looking at it from we gotta look at the VIX because it's been a while since we looked at the VIX. All right, now with the VIX, let's zoom out and let's look at the daily because it's a lot cleaner on the daily chart. So I have been mentioning the VIX, right? Signs of a potential run, right? But these two little breakouts were very weak, very, very, very weak, and it immediately rolled over. The first time it rolled over, the second time it rolled over again. Right now, things are looking more in the favor of the bulls for like the overall market in general, because I think as the fear goes down, right, as this thing continues to go all the way down to $28, at least $28, the market is gonna have some move to the upside, right? So just be on the lookout for that. That's my thoughts on the VIX. I don't think we're gonna spike immediately and break out again for the third time. Like, no, I think we're gonna drop, chill a bit in here, and then later, maybe by the end of October or maybe by the first week of November, we might try again, and this time with vengeance. Like we might see a more ferocious breakout of this giant bullish pennant on the VIX. So that's some things that I'm looking out for. All right, now the first stock that y'all should be keeping in your watch list, that stock is Qualcomm. All right. Now, Qualcomm, this one is been resilient at the bottom. It had a massive drop from the previous highs of 155 all the way down to 105. About a 32% drop. All right. Not bad. A phenomenal discount. Now, if you look very closely, if we zoom into the 4 hour right here, you can see that there is a potential. I say potential because again, the market option number two and option number three with the SPY could play out. I say potential because it's there, but there's no confirmation on the chart. There's a bullish rectangle on the chart right here, right? So if it breaks out and for some reason the SPY jumps again and we just keep going up and up and up, like this thing is gonna run all the way up to at least $121 on Monday if it breaks out, right? But also keep in mind that it can keep cooking for a while. So this video could be really, really early, right? Where we patiently wait for this thing to keep cooking in here, right? Eventually it's gonna wanna get out. And when it does, like you'll be there to get it, right? But the one thing that you want to keep in mind is that is it going to get out? When is it going to get out? And obviously being ready to catch it for that move all the way up. So it could be in the middle of the week or the end of the week, but this is something that I'm watching for a move to the upside, especially given the fact that it's been beaten up for quite some time. And somebody, by the way, this is the bullish perspective of it. And somebody could argue that, you know what, it could keep cooking and then eventually it's going to collapse some more. And I can see why somebody will put up that argument. If we go onto the daily, right? If we go on the daily and we go all the way to the left side, there's that gap from the previous earnings that eventually is going to get filled. Like eventually, Qualcomm will drop to $94. It's a matter of when. It's a matter of timing the drop. It's a matter of what. It's a matter of what happens tomorrow. Essentially, like what happens tomorrow and the setup for the next leg down. Right. So you have to be very very careful and not be um, and time it right. So a potential move up here first, maybe before earnings, could be great for the next leg down through earnings. All right, just keep that in mind. If it behaves great, the main focus is to get in, get your money, and get out because the move down is going to happen eventually. So keep that in mind. So that's the first stock, Qualcomm. The second stock that y'all should be keeping in your watch list for tomorrow specifically, that stock is MU. And MU, I want to share it with y'all because of this. If we go onto the 4 hour, like there is a long term trend of line of resistance that got taken out on Friday, right? So this one is ready to run, at least briefly, like ready to run to maybe 58, maximum 60, before it experiences some turbulence, all right? So definitely keep that one in your watches as well. It's been coiling in here, and it looks like it's gonna have a good day tomorrow. It looks like it's gonna have a good day. So now let's do an update on some of the stocks that I've mentioned. The first one, last week I told y'all to watch three stocks. The first one was JD, which did pretty well for anybody who was holding calls overnights, right? To sell at the open. I thought it could do a little bit more on Monday night, like right here. See, I told you I'll watch it for a jump up to 46 and then a potential continuation to 48. But when it got there, stocks like Microsoft and the SPY, when the SPY got to 377, right? Turbulence was going to happen. And it got there really, really fast. Like as soon as it opened, by 5 minutes after the gates opened, there was an immediate pop all the way to the price target. IWM, the Russell 2000, yeah, got to its target of 177. Like everything just hit at the same time, and that was pretty much the moment for everybody to get out. And this thing just kept going lower. Like right now, I don't know exactly what's going to happen tomorrow with JD. It could be another scenario of what happened here. Like we have this. It could be an island right here, and we might see a reversal where it jumps up to $44. Right? We might see it. Just be very very cautious. It's still at risk. It's still at support, and a bounce is coming on this one. I think a bounce is gonna happen on it. So just be very very cautious and time it well. All right. Now the next one that I want to do an update on is Walmart. In Walmart, this one is, I think it's the only one that actually did really really well. I told y'all to watch it for a move up to exactly that red box right here. So congrats to anybody who took Walmart and made some money on it on Friday. It hit 137. Could it go higher? Maybe. Like it has room. It has room to 140. So this is something that to keep on your watches for a continuation. It might waste some time and pull back to 135 before going higher again, right? But the fallen wedge is still there. It's still clean, and I don't have a reason to be overly bearish on it. So just keep that one in your mind. Now the next one is Roblox, and this one just went sideways. Like after the falling wedge breakout, which was right over here, right there, right? It broke out. It went a little bit higher to 44.50, and then just went sideways. So this one again, watch it for some changes in the volume. Like watch it for a potential spike, and also watch it for intraday structures that may make it easier to know exactly where the next stop will be. All right. Right now, it's still bullish and it's still tremendously undervalued from the previous highs. And the volume at the bottom is also slowly increasing. So keep your eyes on this one. I'm watching this one as well for next week. So that's my very honest thoughts and opinions on all of these stocks. And that is the end of the video. Again, do not forget to annihilate the like button for the YouTube algorithm. As always, helps the channel a lot and allows more people to get this knowledge as well. Also, if you are new to the channel and you haven't done so already, definitely click on subscribe and click on the notification bell along with all notifications. That way you don't miss out on future uploads. If you'd like to be part of a private Discord community where you can get all of this information in real time as I see them, you can find that as the first link in the description of the video below. If you haven't added me on social media yet, you can find me at Paul NGumah and the PATTERNOLOGY LAB on Instagram and on Twitter. And lastly, if all of this is brand new to you, if you're interested in getting started in the stock market, there's some basic step-by-step directions in the description of the video below. Step 1 to step 3. It only takes about 10 to 15 minutes for you to get signed up with all the tools you need to start trading immediately. You can also get some free stocks after signing up with Webull using the third link in the description of the video below. Once again, ladies and gentlemen, my name is Paul NGumah, the Patternology Lab, where we trade patterns and patterns only. And I will see all of you in the next video.